Today is Sunday, March the 17th, and we're just going to review what happened last week. And there were some very important things that happened. We had Friday where advancers led decliners by 60% to 34%. So contrary to the previous week where we had 5 down days, this week we had 5 up days. That takes the market breadth, or the McClellan oscillator, almost back to the neutral point of 0. We'd gone into oversold here. We've been tracking this on and off for the last couple of weeks, and it's come back to 0. So here it's capable of, we've seen back here it bounced off of the 0, here it bounced off of the 0, but there are other times when it's cleared the 0 and gone up to reach the median high here. So we haven't had too many exuberant McClellan oscillators that have passed the median. We've had an equal number of down periods as we have almost as up periods. So we've got a fairly trending neutral market, but generally in the up direction. So now let's take a look at our charts. And we're going to look at the weekly charts primarily, although, with the S&P, I'm going to start on the daily. We've been looking at this value of 2814, which represented a high back here and an area of support here and resistance here. So it's been a pretty important value. And if you've been listening to CNBC and all those people, they say we've breached an area of strong resistance. And Monday will determine if we're going to continue in that direction or if we're going to see some bit of a pullback. So now let's look at the week. And we can see that on the Ichimoku cloud for a week, we have broken through the cloud, but the Chiku span back here is, let me just highlight this in a brighter blue for you. The Chiku span here is right at the 50-day, this blue 50-day moving average, just a little bit below it. So the next area of resistance, we can go down, we've already got it marked here. We've got the Chiku span crossing the EMA 50 on a daily basis, which would be right up there. So that's going to be a potential point of resistance for the market, which is just a little bit higher than where we are now, but the ability to go from where we closed of 28.22 up to 28.34, 28.35. Now the Apple had a tremendous week and finished just under 186. But its resistance is coming, and we've already got this marked on the weekly chart as it's approaching this flat cloud of 189.43. So look for Apple, if there's any strength this week in the market, to hit a high of just under 190. Probably will touch 190, which is this 200-day simple moving average at 190.63, and then pull back and find that resistance on the cloud level right there. So go to the daily chart, and we can see that the Chiku span has broken out of the cloud. That's something that we've been looking at now since January the 29th, and it's broken out of the cloud. So we've got some real positive momentum in Apple, and our next target is going to be around 190. I continue to have short puts, and on Monday I might roll those over to the 185s. Amazon, which we haven't been following, that closely, but it's such an interesting stock, it's taking too long to update. So I'm going to go to Caterpillar. And Caterpillar on the weekly, we saw we had this big pullback 2 weeks ago, tried to make a big reverse this week, but ended up at the bottom range for the week. And the Chiku last week did get support on the cloud, and it bounced up, so the Chiku is now in the cloud. So let's look for price to rise to probably somewhere up in this area here of 144.89, but our target is still 149.58 because of this Gartley pattern. A Gartley pattern takes the highest move to the lowest move, And then if there is a 61.8% retracement, which there was pretty much exactly, and then it reverses back to an area of a 0.886 of A to B, these Gartley patterns are drawn automatically by motive wave, and that's why I like it so much. So it's telling us that we've got a perfect pattern that started here with B, came back and found support, and now unless we break this line, this trend line here, which has started here and has 1 touch, 2 touches, and 3 touches, unless we break that line, we are still on our way to a target of 149.58 with Caterpillar. Gold on the weekly basis found cloud rejection here. Overall trending in a good direction. We've got cloud support, but we have a flat cloud here, so we could see more pullback in gold on a daily basis. We're seeing that the candles are supporting the Chiku span. Really, it does need to finish up at this value tomorrow, which is 22.33, to stay above the candles and then continue to show upward trend for the gold miners. Intel, on the other hand, Intel has been struggling for these past 3 days, Wednesday, Thursday, Friday, to make new highs, not all-time highs. The all-time highs for a close are right here at 57.03, which we've got marked in our chart. So 57.03 is what we're looking at for Intel, and I'm still a half a position on Intel. So not even half, my full position would be 800 shares, and right now I have 300 shares. What I'm looking for is for a fresh new high, and then I'll be convinced that we're on our way to $57. The next one we're going to look at is Western Digital, and Western Digital continues to struggle, but it's in an upward trend, and it's heading towards the weekly cloud value, probably in this area right here of 57.50 is what we're looking at on a daily basis. We're seeing the Chiku getting support off this candle and support off this candle after getting support on the cloud. So these are all important signs. Any downward movement now of WDC could find support at 47.30, 47.30, 46.63, and then it should continue to move upward. So we're going to look for increasing positive momentum for WDC, but if it does pull back, we're going to be setting a target here at the top of that candle of 47.34. So have a good trading week. Sorry I went a little bit long today.